Hello everyone, welcome to DeltaWise. I am Abhijit and today I am going to show you how I earned 3,50,000 rupees in just 1 week. So without wasting time, let's get started. As you can see on the screen, I am recording this video at 11:43 in the morning. The market is still on and today is expiry, and I am going to show you how I initiated my positions from Friday, that is from 5th August. And all these positions you are watching here are being developed from Friday. So this profit here is of entire week's profit. So I have booked 2,37,000 in one account and 1,19,000 in another account. So let's understand the logic behind all these trades. So this is Bank Nifty 15 minutes chart, guys, and as you can see here, this red zone here is a previous week high, this green zone here is previous week low. So these are the two reference point I have used for this expiry. Last expiry was on 4th August. Friday Bank Nifty opened a bit gap up, right, and it went up, but there was no strong momentum. As you can see here, it was not a very clean move. It was more of a zigzag way for Bank Nifty. And at the top right here you can see a M pattern. So this was neckline for me. This is top 1, this is top 2. So as soon as market broke the neckline, I went short in Bank Nifty and I immediately shorted 38,200 call, right? Because if you see the last week's move, Bank Nifty gave more of a sideways move. Bank Nifty went up for 3 days, but after that on Wednesday and Thursday, it went down with a high speed. So when Bank Nifty made a M pattern at the previous week high, which is our resistance zone, I went short here with stop loss above this previous week high zone. As you can see on the screen, I shorted 38,200 call at 225, and to hedge that position I bought 39,000 call at 44.87. As you can see, I only shorted 300 quantities because I don't short all my quantities at once. I initiate half of my quantity on Friday, and if my view is right on Monday, okay, market goes in my favor, then I add few more quantity on Monday and I carry all these positions till expiry, which is on Thursday. So let's see what happened in Nifty on that particular day. This is Nifty 15 minutes chart and this is Friday's chart. At the same time, when Bank Nifty gave you the M pattern at the resistance, Nifty also gave you the same M pattern at the previous week high resistance. So I went short in Nifty as well. I shorted 17,500 call, and to hedge that position I bought 18,000 call, and I carried all these 4 positions for Monday. So let's see Monday's chart. So Monday Bank Nifty opened a bit gap down and I was in profit of more than 40,000 because my view was bearish for this expiry and market opened gap down. But what happened afterwards? Bank Nifty started going up with a momentum. But I had a clear plan in my mind. As long as Bank Nifty is trading below this previous week high, I'm not gonna exit my short trades because my view is bearish. So even if the market stays sideways, I will be in profit, right? So as long as price is below this previous week high zone, I have no reason to panic. But what Bank Nifty did on Monday, Bank Nifty broke this previous week high resistance. So I had to book loss in my short position. Let's see what happened in Nifty. On Monday, that is 8th August, Nifty gave you a clear breakout before Bank Nifty. So as soon as this 12 o'clock candle closed above this previous week high resistance, I exited all the short positions from Nifty first. Then around 1 o'clock, when Bank Nifty broke this previous week high resistance, I exited from Bank Nifty positions as well. And then I immediately reversed my positions because I knew that market has been bullish since last 1 month. So there are high chances that this breakout might sustain. So which positions I entered into? I shorted 38,200 put in Bank Nifty, and at the same time in Nifty, when it gave a clear breakout, I shorted 17,500 put. I will show you the pricing as well in the live market. This is Bank Nifty. Let me go to the info. As you can see here, I shorted 38,200 put 600 quantity at once because it was Monday, right, and Tuesday was a holiday. So if my view is right, I will get a very nice theta decay on Wednesday. So that was the reason I went all in once. I shorted 600 quantities at 282.5, and to hedge this position I bought 37,000 put around 35.28. Same strategy goes with the Nifty. I shorted 17,500 put at 101 and I bought 17,000 put at 11.95. Okay, so let's see what happened on Tuesday because I initiated these positions. I now have to wait till Thursday. Yeah, Tuesday was holiday, so let's see what happened on Wednesday. On Wednesday, Bank Nifty opened gap up, which was my expectation and which was my analysis, and Bank Nifty started coming down after the first 15-minute rally, but immediately it took support from the previous week high zone. So there was no need to panic. Bank Nifty took the support and it rallied for another 200 points, and for rest of the day Bank Nifty was sideways. So I didn't do anything on Wednesday because what was my plan? As long as Bank Nifty is trading above this previous week high zone, I will be in profit. Let's see what happened on Nifty. As you can see, Nifty started coming down as soon as it opened, right? It even came below the previous week high zone, but I didn't exit. So there were two reasons. The first reason was I shorted Nifty 17,500 put at 101, right? So I had that extra 70 to 80 points premium by my side. So the break even for me was around 17,420. So my plan was I would either exit from this short position or I would do some adjustment. But my break even point in Nifty was not breached, right? And my second reason was Bank Nifty at the same time took support from its previous week high. So there was a high chance that Bank Nifty will bring Nifty up, and exactly this is what happened. When Bank Nifty took support from previous week high, Nifty also went above its previous week high and closed somewhere here. Until the end of the day, I was in good profit of around 1 lakh in this account and 50,000 in other account, because Bank Nifty and Nifty, both the indices were sideways on Wednesday, and in the sideways market sellers will get benefited out of theta decay. So let's see the Thursday chart, which is our target date. So on Thursday, Bank Nifty opened with a huge gap up of more than 1%. So we can say that this breakout has succeeded, and I was in handsome profit of more than 2 lakh. So as always, I waited for 5 to 10 minutes and I exited all my long positions because I was already in good profit. And we have seen whenever market opens with a huge gap up, there has to be some profit booking. And to be honest, there was some premium left in all these positions. And if you calculate, I let go around 17,000 profit. But this is the lesson I have learned from trading. You have to let go the greed in order to become a successful trader. So I knew that the 17,000 profit was not worth waiting for the entire day, right? Because there is only one certain thing in market, which is uncertainty. Bank Nifty and Nifty both would have come down like this. So the 17,000 profit was not at all worth waiting for an entire day. So I would advise all the option sellers, if your option has decayed more than 90%, you can exit from your positions. There is no need to wait till the option becomes zero on the expiry, because I have seen many a times that a particular option is going from 100 to 5 and then again from 5 to 100, all this in one day. So if you are selling an option at 100, you can exit when it comes to 10, 15. So it is not worth waiting for another one day for just that 10 extra points. Okay. Now let me show you the payoff chart of my positions. So these are the Nifty positions I took. As you can see here, maximum profit was around 1,07,000, and as you can see, maximum loss was around 4,90,000. So you must be wondering that the risk reward is very bad and this is very bad trade. because if my analysis goes wrong or market goes in opposite direction, I will lose 5 lakh rupees in this single trade. But this is not the case. I will explain you why. This is maximum loss. So this information tells you that whatever happens in market, you will not lose more than 4,92,000. Okay. So by taking these positions, your view was bullish, right? So it doesn't matter if market goes down by 5%, 10%, 15% tomorrow, you will not lose more than 5 lakh rupees in this trade. Okay. But now you will say that you are taking just 1 lakh rupees profit for 5 lakh rupees loss. So this is not true. If you see my analysis now, my trading plan was simple, right? This previous week high was a reference zone for me. So I had this plan in my mind that as long as Bank Nifty is above this previous week high zone, I don't need to do anything, right? But what happens if Bank Nifty opens gap down below this zone? In this scenario, I can't do anything, right? But if you see, even when Bank Nifty opens 1% down, I will not lose 5 lakh rupees. I will lose around 70 to 80,000 or maximum 1 lakh, right? Because this max loss denotes that you do not exit your position till expiry. So I just keep these positions open till the expiry, and Bank Nifty comes down below the 17,000 put, which is the options which I used for hedging. So for example, if I keep my positions open till expiry and Bank Nifty goes down below 17,000 put, I will lose 5 lakh rupees. But it is not gonna happen, right? As soon as Bank Nifty opens 1% down or Bank Nifty opens below this previous week high zone, I would immediately exit, right? I will not wait for 17,000 to break, because this is completely against my analysis, right? My analysis says that if Bank Nifty comes down below the previous week high zone, Bank Nifty will come down and it is no longer has a bullish structure. So this was my simple plan. And as you can see here, the estimated margin or capital required for this Nifty trade was around 10 lakh, and for Bank Nifty it was around 11 lakh 50,000, right? So overall it took me 22 lakh to initiate all these positions. And now you must be thinking that the capital required is quite high, but it is not 100% true. Let me just reduce the quantity. How much capital is required to trade in one lot in this spread? As you can see here, you require around 42,000 margin for this single lot, and you can earn around 4,400 rupees, which is around 10%, which is a very good return, right? So if you have less capital, which is around 50,000, 1 lakh or 2 lakh, you can go for single lot trading, and as your trading capital increases and your experience also increases, you can linearly increase your quantity. Because I have seen many traders like 50,000, 1 lakh, they always go for option buying irrespective of the losses, right? I'm not saying that option buying is bad, but if you're facing constant losses in option buying, I would recommend you to try option selling once. But before entering into the option selling world, you must gain some knowledge and learn risk management. So this was all about the expiry trading, guys. I hope you liked the video and you learned something new today. And if you think I'm adding some value to your trading journey, please don't forget to subscribe my channel and share this video with someone who will find this information useful. Apart from this expiry trading, I also do intraday trading on regular basis, and I also conduct intraday training program for beginners to intermediate traders. Let me show you the content of the intraday trading program. So this will be the content for the intraday training program. If you are interested to learn intraday trading, you can join my next batch, which is gonna start this Saturday on 14th August. And if you want more information, I will provide the course link in the description. Till then, keep learning and happy trading.